All right. Hello, everyone, and welcome back to another Pepperstone live event here. It's been an exciting couple of weeks with increased volatility, earnings season kickoff in the US, and of course, some big movements around markets. Today, we'll be discussing everything to do with stocks, commodities, and cryptos as we break down the hottest markets right now and how we're seeing them from a technical kind of analysis perspective and flow perspective. I hope you had a great start to the week. And my name is Thomas Atkinson. As always, I'm joined by Tyron Abella. Tyron, it's great to see such good trading recently.
Yeah, no, we've certainly seen some volatility. Welcome, everyone. It's been good. The last few weeks have been really, really good. So we've seen a lot of good opportunities play out. A lot of very important technicals are actually holding at the moment, and we're going to certainly explore some tonight that are probably at a breaking point. Yeah, so some very important levels I think we're going to discuss now. And it's almost time for the trends to set in. Earnings is nearly out of the way now. A lot of it's done and dusted. So it's time to really start to knuckle down and see if we can't find ourselves a good trend, Tom.
All right, we've got Oren, Jordan, Burnt, and many others joining us. If you can, give it a thumbs up if you enjoy these types of videos. But just before we get started, Ty, we do have a quick risk warning. We'll see you in just a moment, guys. All right. Well, Ty, I think what better place for us to start this week before we go into some currencies, commodities, and other things would probably be the US 500. So the S&P 500. We're in earnings season again. We've seen some of the biggest magnificent stocks, as in everything except for really Nvidia, come out now with earnings. In general, I would say it was mostly positive across the board. And of course, the notables right now have been buybacks, which seems to be the kind of way the market's been pushing itself forward over the last decade. It started with the banks. I think I was reading the other day, $600 billion of buybacks from Apple over the last 10 years. So they put another 110 billion on last week. It's it's one of the reasons why sometimes people say the markets are quite bullish. But we find ourselves at a very pivotal point because, of course, we've entered into what we call a positive gamma environment, which is basically where options are also in the direction of the upward trend. And 5,200, we were just discussing this before the stream, is the big key resistance. Basically, if we break above 5,200 and we hold that level longer into the trading session, so that's into the New York trading session, then it becomes more likely that futures hedging needs to occur, which can create basically what we call a squeeze event. And that's a lot of what we saw in 2024 so far. We went positive gamma, we flipped to what we call negative gamma around here, pushed down in price action. You see this represented in price action, but now we find ourselves right back at that 5,200 zone. So I think if resistance, if the bears are going to take any control of this market, it's really around here that we expect that, isn't it?
It is most definitely. I think that the three indices really highlight that. The three US-based indices really highlight this level. Actually, 5,200 is extraordinarily strong on the S&P. But even the NAS and also the Russell 2000 find themselves at a pretty reasonable level of resistance. So it's an extraordinarily key point. But I think you're right. If we see a break of the 5,200, it really probably elevates itself to a level where it's probably going to reach the all-time high again, and probably fairly quickly too. I mean, it's not very far away, but this is an extraordinarily important part. Like I wouldn't be the first person in this party. I would definitely be letting it break through first. But if it does break through, I think a significant sign for it.
So let's have a look on the smaller time frames. As always, when you identify a key zone on the higher time frames, such as a weekly, monthly, daily, 4-hour, any of these time frames, then what you want to do is you want to dive into the smaller ones to see whether there's a scalp, a day trade, any of those types of things. And you'll notice that when we come up, as always, we've got our favorite picks of the week, both Tyron and I. And when we break down those a little bit later on, in particular, I'll break down one and I'll show you what I mean by higher into lower timeframes. As always, guys, as well, if you have questions about anything to do with markets, please feel free to ask them in the chat or ask them in the comment section. We do read those. And of course, we answer any of the live ones at the end of the show and during the show. All right, US 500, let's get into it. So 5,200, we already knew was key resistance. We spoke about that probably even last week. We've talked about it a lot, just personally in terms of when we've been discussing it with people. And we hit this level, and then we found instantly, almost to the pip or the point, a sell. So we clearly know someone's there. And it makes sense. There's a lot of options here. As we mentioned, there's resistance at psychology level. So you'll notice here I've got put support, but really from a price action base, I feel like it's this level here, Ty. We're looking for a break below 51.75 today. If that does end up occurring, which I'll mark here on the charts, then I could see temporarily anyway weakness in the markets, and possibly we might push as low as maybe a 51.50, or even the biggest zone, which is the 50.80 underneath it. So what do you think? Do you think that, I mean, right now it's melting up, so we've still got this slow residual kind of higher high and higher low. But what if it makes a lower low here?
I think if it makes a lower low, it plays into the hands of the bears that are really trying to short it, from this level. I think that any sign of weakness here, I think the bears will grab hold of it. I think there's a significant way to fall. We are in a seasonally weaker time of year. We've got to remember that. Like, we are in the midst of May. We sold off a little bit early. We don't know if the end of the downtrend is gone now, but I think that everyone's on high alert. I think there's a lot of high alert going on at the moment, that if we do see a little bit of a breakdown of, a series of lower highs and lower lows on a 1 hour or 15 minute, I think people will probably start to get a little bit trigger happy, Tom, and look for that potential move back down to maybe the 50.50 to 55,000.
Yeah, so a few people have asked what happens, like, at the moment. Is the trend bullish? I would say yes. Generally speaking, it made some big changes just a little while ago. But what we're looking for in terms of if it's going to go back into a really bearish zone, I don't think you can really say really bearish until it gets below 5,000 again. And what I mean by that is if it does end up doing this, let's say it did a bit of a trick and it comes down and breaks through, at this point, the chance of a 50-week moving average, which you should always have on your charts, for the US 500 in particular. Look at the 20, look at the 50, look at the 200, put them on your charts, have a look at how markets interact with that. It's a great dip buying zone a lot of the time from a technical perspective. If that happened, that'd be really negative. But for now, I've also got some anchored VWAPs, a few other things. I think there's a lot of little areas around here, 51.50, 51.10, and 50.80, that all present possibilities of, if a sell does come through, buyers to recommence. Now, Tyro mentioned before, actually we'll go to the Nasdaq first. Tyro mentioned before that all of these markets are at resistance. So Nasdaq's the same. I actually went through, Ty, and I found out where the largest trades are in terms of Nasdaq, recently up in this level, and this box represents the most traded area. So basically, this is where, again, if you're going to see resistance, it's going to be here, because the markets have rallied up and then they've found, the most traded area, and you can see they've kind of stopped. So again, as a trader, this is a point of interest. Do we have activation? Not really. It's a guess at this point. As we often say, patience, react, don't predict. I think you find the key zone, then you look for your activation steps. Now, if the market came back down, Ty, I've overlaid a couple of things here. 17,800. Not only was it the key support last time that was broken, it became the resistance, and it now has anchored VWAP and the 20 moving average on the daily. So if this market does go bearish, similar to this SPY, I could see bulls really here. I mean, I actually think that's a very decent bull level, if the market does find weakness. Your thoughts?
Yeah, and I think it could happen fairly quickly too. Like, that could happen
Mm.
intraday very, very easily. Something like 200 points from where it's at now, or
Yeah.
250 points. So I think it's something to probably keep an eye on in the US trading session, actually.
Yeah.
That if it does happen to sell off, it's not, look, it's a precarious zone. I think that a move down there would need to. I'd want to see, if you were going to be a proper bear and look for a move all the way down to, say, the 7,200 again, or 17,000. The 17,000 would be the target that I'd be going for if we really sold off properly. But I would want that broken level right there. 17,800 is a level I need broken by a daily candle. If that's not broken, I would be very, very concerned that, you're right, the support there will kick in and the bears are looking for a reload zone. And look, it's a 2 steps forward, 1 step back approach. It's probably a 38.2 pullback of that last swing. And probably I'd say there's a pretty good chance it's right there. There's a lot of overlays to say that potential zone is a pickup zone. So just be really mindful that, although it looks like a resistance right now, trouble for a bear could be only 200 points away.
Yeah, I really like that zone. Now, I think you mentioned you wanted to talk about the US 2K. So are you seeing a similar kind of circumstance here on the US 2000? This is the small cap. Just know.
I am. I do. I love the Russell, because I think it's still leading the way a little bit in terms of where the big indices are going. We've been using it as a bit of a proxy, really, to short and long. And I think this level here is an extraordinarily important level, because it's actually stopped there many times recently. Now, Russell's a little bit different to the other two indices in that it's not at all-time highs or close to all-time highs. So it still has a fair bit to go, like several hundred points actually, before it actually reaches all-time highs. So it's the one I like to watch, because if it does start to move down obviously we want a series of lower highs and lower lows. Yeah, there's a reasonable chance that 2000 marker will be where I'd be looking for that support. Now, that may well coincide with the Nasdaq pulling back to 17,800 as well. So it's probably one of those zones where, similar to what we just talked about, if it gets to that level, I'd be looking for a potential reversal from that zone to actually maybe push up. So resistance is there to be broken, Tom. We know that. Like, it's if the sell in May phenomenon is not going to play out this year, because we've already seen a sell in April, we may not see any more weakness. We still may see a pullback to give us a leg up to the long, and we've obviously got pretty easy targets to aim for. But it's very, very important to remember, though, that the US 2000 did not reach its all-time highs. In fact, it's nowhere near it. Okay, so
No.
yeah, unlike the NAS and the S&P 500 that have hit breaching new levels, this one is still a long, long way away. And that's why I like looking at it, because upside potential, if we do get a launch off the 2000, is probably a little bit more than the other two. I'd trade this one with a little bit more confidence going along, because there's actually levels that it's been to before. I get very nervous when I'm trading into uncharted territory, Tom. And that's where the S&P 500 and the NASDAQ will be, in a heartbeat, if they actually get a break above these current levels.
Yeah, so I think the things that I like about this is a lot of synergies at 2K, psychology number, trade zone, 61.8, a lot of things. Usually the Russell will drop more than the NASDAQ as well, as terms of percentage, being that around 35% of the companies in this 2000 actually make no money, if you can believe it. They actually lose money. They don't make money. The other thing is that you've got this rejection week. So as Ty mentioned, if we get through 2084, which is going to be the US 500 through that 5200 zone, then that's going to also start squeezing the market, and potentially there's more runway here on the Russell 2K if we do end up going into a really almighty bull run, which I kind of suspect we may, Ty, based on the election year phenomenon, the cycling, where we're at, what we're seeing. We're told one thing, which is obviously that everything's tightening and liquidity is not there. But really, when you start looking underneath the hood, it seems like debt's being underwritten pretty well. And one of the ways you can actually look at that, guys, if you ever want to see it, is to go and have a look at your financial markets and see whether the banks are making record profits. And if you look at the Australian banks or you look at the American banks, they're all doing it, Ty. They're all making record profits out of nowhere. And that shows you that there's a decent amount of debt creation on the board. And you can see here that that's what's happening with the financials. They made, look at their run since October lows. There's clearly something going on. Otherwise, they wouldn't be going so long. Now, that brings us on to discussion about the yields. So there's been a lot of talk about basically the Federal Reserve rate hiking. Now, again, because I think there are powerful forces at work here, Ty, that maybe we might get a rate hike. We might just get a massive hold for a long time. But I do think that maybe the markets were getting a little bit overzealous on the cut side. In general, I think the thing is here for markets is you actually don't really want too many cuts. Because remember, if the market starts cutting, central banks don't cut for, good reasons. They cut because of weakness. So yeah, just watch the yields. One of the codes you can look at is US2Y. One of the things I always suggest that everyone should be looking at is the inversion curve. So if you haven't done this before or you're new to this type of stuff, this is still good for currencies. It's still good for everything. Is you really want to be understanding this particular chart. And I've overlaid it for everyone today. So let me just quickly load this up so you can see it. So what this is it's every other inversion that we've had over the last kind of 3 decades actually. And what it shows you, these are all when it actually crossed to the downside. And if you load up the S&P 500 over the top of this, so we'll just load the SPX here onto the chart, what you're going to notice is that when that comes on, pretty much when these crosses happen, you need to start thinking, well, wait a second, what the hell's going on in this market? Now, my thought process this time, Ty, is we're probably going to cross, sit there for a while. Markets are still going to rally. Everyone's going to forget about this, but I really feel like yield inversion is a very important factor, and it's never actually been wrong. And we've gone 500 days of yield inversion now, so that's quite a lot. That is quite a lot. It's kind of terrifying.
It is. It's pretty full on, definitely.
Yeah. So what could that be good for? Well, let's go over to everyone's favorite, which is, of course, the US dollar, because it means that currencies could be moving big time over the next couple of years. I would say that it might be one of the hugest currency move periods. Maybe not so much this year, but when central banks start to move, let's say they move their policies towards cuts and they're all going to be doing it at different times. I would say that currency trading over the next couple of years, guys, is going to be wild. You remember the GFC, Ty. You obviously remember what happened when we were trading it. It was wild. The first quantitative easing, we remember it well because I remember the euro went 300 pips in that quick. And I was like, what just happened? And it was very fast. So, this is going to be a wild time, I would think. But I've got some thoughts on the US dollar. So it showed signs of potentially trying to strengthen last week. We discussed that, whether it was a flag. And we also talked about how until it gets through 106.50, we weren't keen on it because we thought it could be false. Now, it turned out it was false, and the market obviously broke back below. But now that it went down, even with this wick, I'm starting to think that up in this area that we're approaching at the time of this recording is actually where the bears might sit. It's the most traded level. It's a 61.8 fib. It's a very decent area. And you can already see just before we've reached this point, we've seen a little bit of sickness or weakness. So let's jump into the smaller timeframes here for the US dollar, because this, of course, will relate to all of the currency pairs out there, or a lot of the majors anyway. So I like this supply tie. I feel like there is action in here towards potentially the bears. What do you think about the 105.70?
Yeah, it's very, very interesting. I think that, obviously, the euro is the one we would want to be trading if we're actually looking for a particular move on the dollar index. But obviously, it's one of the most liquid currencies going around. I do like this level. I think it's doing some interesting things. There's a lot of action here. Look, it's been here for a long, long time now. We've been talking about the dollar index at that sort of anywhere between that sort of 104.20 to 105.50 for a long time. And yeah, it's finding itself there again. I'm starting to believe that it's nearly not going to be able to break through. I'm thinking that resistance is going to hold again. I know you got on a longer time frame. If we just go to a daily for a second.
Sure. Yep.
Here we go. Yeah, so on a daily, when you look at it, we've seen the peaks, and it really has come down from those sort of 106.20 to 106.30 level, and if it reverses here, it's going to give us that that lightning bolt. There is going to be a significant change of trend at this point here. There's definitely resistance there. There's no question about that. You can see there's a lot of price action right at that level. If we see a move back down to 104, I start to fear for the strength of this one. I know 104 is a pickup zone. And if the support's going to be there, that's the place it's going to find it. 104 to 104.20 is where I'm pretty sure a lot of orders are sitting. And that is the zone that needs to be broken if we are going to be truly going short on the dollar index. But for now, I think we're probably sideways anywhere between that 105.50 and basically 104.20 is basically a sideways moving market. It has been, when you think about it, for a long time. When you look at it from the chart perspective, we've been trading in this zone for a couple of months now without any clear direction. But I think what it's doing is providing reasonable opportunities to trade inside what is sort of a bit of a mini channel. I think if you're getting any momentum swings on a smaller time frame like that 2 hour or 1 hour, I think it's pretty safe to trade inside those boundaries, and I think you're going to get decent moves out of it.
Yeah, and I think that will therefore lead into proxies such as the euro. So the euro might become a relatively decent buy. Obviously, it's contending at the moment with a very key support becomes resistance area. So you can see why it's finding some resistance. But US dollar starts to find weakness around that area. I could see the euro coil right now breaking to the upside. And I think the biggest tell for me here is you can see there's all these rejection wicks. So if you go to down, as you go up timeframes, you'll notice there's kind of like a wick down, a wick down, a wick down. Now, the market looks like it's turning to the downside. But if we see the dollar, so let's say this happens, if we see that, that's actually accumulation coiling. And because there's going to be so many shorts behind those wicks, that if you get through 108 in the future, I could see it really starting to squeeze to the upside tie. That would therefore push the next narrative, which would be coinciding with the dollar index at 104. So I think the euro, that's really pushing something like this, like a 108.60, even a bit more. So this is an excellent TP zone for something if we do end up starting to see that. And I think it's got some legs. It's got some possibilities there.
Yeah, I think so. I think it's got good possibilities.
Let's move over to gold. So pretty much with gold, I would say it's very tough trade here. I don't have clear direction. Now, if you've been watching the show for a long time, you've been, following along on the Pepperstone platform, then you would know that we're very, very bullish on gold, or at least I am. I'm not sure if Ty's that bullish, but I'm certainly very bullish on it. I'm sorry about my sickness here, guys. But basically, the general gist is that I believe that gold is in kind of a pretty sustained bull run. The problem is, of course, with the trading aspect or a swing trading aspect, is you need activation. So, did it deserve to have this pullback in time? Absolutely, which is basically more of a sideways market. Could it go worse? I think if it gets under 2280, there's a good chance we're going down to 2175, and I'd be looking for buyers to recommit there. But from a technical level, I don't really see buyers really recommitting until we get through 2352 ties. So that's my thoughts on gold. But I do want to trade silver and talk about that in a second.
Yeah, I think that gold is hanging on for dear life right here. I think in terms of the moves that we've seen, a breakdown below 2280, and I think that we'll find ourselves at 2180 fairly quickly, I'd imagine. There's not a lot in there in between trying to catch it, not a lot of support there. And yeah, I think it can get there very quickly.
Have a look at silver, though. I think even a cleaner chart, again, pullback, fine. That's good. $29, $28. This is definitely a resistance on the higher time frames. But have a look at this price action. I really like what I saw here. Basically a tweezer in terms of price action here on the daily time frame. And we've seen some strength coming off it. Now, 27.75, silver's still behind gold, Ty, by a decent ratio. So that means that maybe it's going to play catch up. Maybe it'll be the one to break and to preempt what gold could be doing.
It certainly looks stronger than gold at the moment, even though it is trailing it. It's most definitely looking stronger. That was a very, very good pullback zone. Look, it's doing all the things we wanted to do. It's trading above the 20 moving average on the daily, which is always a good sign. And it has come off a very strong level. I can see there that really highlights it. I mean, on the weekly, you can see those very, very strong resistance points. So I would expect very, very strong support at that level, which I think it has got. And a move, I agree. I think a move up to 29.50 to 30 is very, very likely if we continue with that. All we're looking for is small swings down on the 1 hour or 2 hour charts down to a 20 moving average, and that's going to give us the momentum we need. As long as it's making higher highs and higher lows on the smaller time frame, it's happy days.
Yeah, it really does look, I think, pretty clear that it's got some nice action. A few people in the chat, Ty, saying they think the next move for gold could be down. I definitely agree. It's possible. It's probably, it really just depends on the break. I mean, whenever you're coiling in a tough area, it's very tough to say whether it's here and here or whether it's here and just keep going. But silver, I think, may lead the way in this case. All right, let's go over to my pick of the week, which comes off your pick of the week last week, actually, Ty, which is US oil. So you were pretty bearish on this one, which you were totally correct on. So this is obviously the head and shoulders from last week. You had the evening star set up here, I believe, as well, that you were looking at. And your plan was to get it down to around 78, which is the level that I was looking for to see whether the bulls could recommit. And it happened. So nice. Very nice hit. Very nice level. But this is actually where I think buyers could recommit to oil. But it's kind of back to that story I was saying before, guys, where it's about having patience to react to the markets. Do I think this zone's good? Yes. Does Tyrone probably think this zone's good? Pretty sure he does. But do you think it's good, Ty? Pretty good zone? Yeah, pretty good zone. But does that mean we just go buy it randomly? No. Because what we've learned is that buying the dip, especially with commodities or currencies, is they often don't really have necessarily a full fair value. It's not like a stock market index that just kind of like generally floats higher over time. Generally, of course, that's not always. So US oil breaks down to this level, and you'll notice here it's starting to show signs of exhaustion. So to me, has it gone further than some people would suspect? I would say yes. And I think what it's done here, Ty, is have a look at this low. Yeah. I'm going to put a line here for everyone so you can see it. What just happened on this chart is that we've come down, we've tested this level. Now, we didn't quite snap through it. And I'm sure that some platforms and some versions of oil have actually gone through. We can check that by looking at Brent as well. But basically, the market's fallen down. The market's found a little bit of buyers. Now, what we're looking for is smaller time frame. Have we seen any turn? Well, the answer is no. It's still driving down. A series of lower lows and lower highs the whole way down. That's bad price action. Just frankly, we might think it could be bullish here, but that's bad price action. So we're looking for a higher high. And at the moment, that still means that I think the barrel's going to need to get above 79.88. But there could be a very strong trend if it does end up doing that.
Yeah, most definitely. It's a very, very important zone for it, and it has been for a long time. Look, it was very important before it actually broke through and went into the 80s. It
Mm.
was holding up that channel. Like that channel was extraordinarily strong for a long time there. So it's no real surprise to see it interacting at this level again. It's certainly one to watch.
Yeah, so I like it from a 79.88 perspective. See how it trades over the next 24 hours as well. Maybe there's some more structure that we'll end up seeing and we'll get a better lower price. But yeah, for me, it's an example of finding a great zone, knowing it's good. You probably take profit at this area if you were on the shorts, but doesn't mean it's over because that's how it is. And I think it's also a great story on why the narrative is so bad versus the price action. If you're going to, I think, extract superior profits or superior edge in the markets, you've got to think about the narrative. You know, if you actually go and check the news articles, this is literally the point where all that unfortunate stuff happened over the Middle East, and the market actually rallied into the event, and then when that became the reality, it actually dropped off, and that's counterproductive to what a lot of people would think. But in this case, what this is just showing you is that price action can lead the way, and I always like to think of it as the market kind of gets information through AI and through some crazy tools. I remember when I first saw a Bloomberg terminal, and that's nothing compared to the technology people have now. But I remember when I first saw it back in 2007, 2008, the thing looked like a Christmas tree. How much information was coming into it, and you can
Yeah.
only imagine what these robots are compiling nowadays. So I think they knew that things were tensions were rising, and then of course and then generally speaking, it just shows you the narrative is not necessarily the price action. All right. Now some other things, Ty. For me, they're kind of like major positions that, of course, most people like to look at. There's another one though, which is of course Tesla stock, and Tesla
Hmm.
stock got one of the almighty pumps. Elon Musk is the master of the pump, and he managed to pull out the big shows, getting the stock to go 40% on the mention of basically switching the company to an AI company in some ways. Now we've seen a fade off this point, and of course, the market's coming down. But I think around this 176, there's a lot of ribbons. So basically, what that means is we've got daily 50 moving average, we've got certain VWAPs, we've got the 20 moving average sitting here, we've got the most traded zone. I kind of could see 170 or even 162 becoming levels where buyers recommit to this new AI play because clearly something happened. I mean, the sentiment was so bad. This stock was the worst performing S&P 500 stock of 2024. It's not anymore, but it was the worst performing stock. It then comes out of the gate super strong and starts squeezing up. So has it changed trend? I think from a price action standpoint, yes.
Interesting. I think it wants to. I think it wants to. It's got to do a little bit more for me. And this pullback actually may help it because what we don't like, when we're trading is seeing the market go in one direction really, really quickly without giving you a healthy pullback to actually get involved. Now,
Correct.
it's had two massive gaps after the earnings. We know that. And realistically, you're right. It's landing right on the moving averages, all three of them. And if it does bounce from here and make a new high and gets basically above that 200 again, I think that's the real catalyst for this to potentially push on and start to move up higher. And then, really even 230 and 240 aren't out of the question when it gets through that break. But I think to me, we need to see a big lightning bolt on it. I'm not totally convinced just yet. It's done some
Mhm.
good things, but those moving averages are going to have to hold. They must hold, in fact, at around that 176 to 177 level. If they hold there and it pushes on and makes a new high, and actually pushes past 200 and gets a daily close above 200, I think 30 or $40 could come very, very quickly on the way up. It could really break out. But there's just a couple of important things it's got to do. I don't think what it's doing now is necessarily a bad thing for a move long, but it's got a little bit. It needs to stop here. It wouldn't want to be selling off anymore.
Yeah. So for me, I've got the two levels. Obviously, you're saying this one's the most important, which arguably it is. I mean, most traded zone, You do have a pretty nasty looking kind of candle formation coming into this level as well. So that's kind of pointing towards further weakness, which is actually what we're seeing pre-market today. Like if you said to me when that closed yesterday, and same to you, will it be opening negative the next session? I'd say statistically yes, because that
Yeah,
looks really bad. Um,
yeah.
so yeah, I don't blame it for going down. I think it needs to, as you said, but I do think there's two key zones where buyers could recommit. All right, let's have a look at crypto. This has got everyone talking, which is, of course, the crypto market. Bitcoin coming off the sneaky 57,000. Now, I can't remember if we mentioned this last week. I think we did. I basically went and did some more analysis on it. So, originally, what I thought anyway was we would break 60,000 and we would fall away to about 52. But in technical analysis, that's clear. Like every single person was seeing this. Everyone, every single person. So I actually did some further analysis and I found that 57K was a huge level. It was a weekly 20 moving average. It was a couple of anchored VWAPs. It was a certain type of fib as well. And there was actually some structure in here on the smaller time frames. So it came off this sneaky 57K and it rallied, it rallied, it rallied, and then it hit straight into the supply, the first major supply. And so far, it's found some weakness. Now, could this be a precursor to the markets at resistance tie? That's the question a lot of people are asking because a lot of people believe it's front loading the market. I don't think it's front loading the market, at least enough to give you edge. But what I do see here, and you can see I've analyzed it, is this some kind of little head and shoulders, and therefore the market's actually looking towards going back down to 60. Now, you haven't seen this chart. I don't think you've done the analysis on it today. What are your thoughts when you see this? Is that valid, or do you think that this is invalid and this thing's more long?
No, I think it's valid, and I think that when you're going down to those sorts of time frames, it's a very tradable zone and a very tradable time frame, the 2 hour time frame. We know that, so any pattern recognition that we can see is always going to be well respected. And I think that, yeah, you're right. Look, I think the 61,000 ish area is a reasonable place to aim for, and I think that head and shoulders will probably land straight into it. I'm
It
not,
does.
yeah, I'm not convinced just yet that the sell off is just, to me, it could get back below that 57,000. So I know it's a very important level, but on a daily, it still looks short. And the reason for that is because we've got a series of lower highs and lower lows. So when we go to a daily chart, you can kind of still
Because
see
it hasn't gone through that supply, yeah?
hasn't gone through the supply. So and until it does, I mean, if you look at that, forget what the symbol says for a second. Like forget that it's Bitcoin, forget that it's anything. The first thing you're going to see is a series of lower highs and lower lows. And until we actually get through that supply zone and make a new higher high, this is still technically in a long-term downtrend. So and until it does something different, we shouldn't be really looking for very powerful longs until it actually proves itself. Like we keep saying, patience is the key when trading. And if you look
Yeah.
at that, all I see is lower highs and lower lows. And yes, 57.5 found some support there, but again, the 20 moving average seems to be holding it up. I think it's going to be very interesting trading. And the good thing about it, Tom, is that there is really good ranges. So you can actually get involved in this very, very easily and trade intraday, swing. There's all sorts of ways that you can actually trade it and get the volatility that you need, even though it doesn't look like it's moving very fast. But hey, it moved like $7,000. That's a big move. And even if you caught, small amounts of that, it's still really good trading. So the volatility certainly is there, but I think the opportunities are there for the long and the short. I think that I'm not still fixed on the direction just yet.
Yeah, I agree. The direction's not clear unless you were going to push out, longer time frame, like 6 months, 12 months, 2 years. If you are generally bullish on market, which some thrust stats are starting to say, I'll just let everyone know the S&P 500 or New York Stock Exchange, 70% of stocks, other than the previous session, but the previous 3 days, 70% of stocks were up for 3 days straight. And that actually begins a relatively rare thrust indicator, which generally means that a markets over the next 12 months would be, at least from a statistics standpoint, maybe a little bit more bullish. So a lot of people have this after halving event tie on Bitcoin, or after halving, everything's going long. Historically, yes. I actually did some numbers on this the other day, and I found that each subsequent halving event, I think, was 1/5 of the total percentage. So as a market matures, as we know this, as a market matures and we end up going towards more of a large cap, more of a stable kind of market, generally speaking, you get less gains, which you know as well. It's not going to be 2,000% anymore or anything like that. So I found that every single time you had a halving event, the previous percentage that you ended up getting was around 1/5. So it's not gonna. I don't think it's gonna make it $1,000,000 a coin. I just don't. A lot of people are saying that. I just don't. I think that statistically, that's going to be incredibly unlikely. But yeah, it's an interesting stat there. The 1/5. Maybe I'll bring it up next week. I'll see if I can grab it for someone, and you guys can have a look at it. But if you'd like that, let us know. But anyway, yeah. So Bitcoin, you're saying until you get this higher high, it's realistically long term or at least daily time frame downtrend. So we've got longs, we've got shorts, we've got all sorts of things. That's good for traders. That's obviously a little bit more annoying for that longer term hodler. But really, if you put it in perspective, Bitcoin's up big time this year. And some of you would even champion it coming down to 52K because that means cheaper coins. Yeah, Ty? Some people like that. All right. Well, let's take it over to some questions in the room. I see one here from Oren. Please put your questions in now as well. And he says, when do buybacks occur actually for Apple? So I think they have buyback periods and obviously they purchase over time. A lot of people actually have asked me the same question, and I don't think you need to fixate too much on the actual date that they're purchasing. So say like for an Australian stock, if an Australian stock was doing a buyback, they'll just purchase bits over time. And it has an overarching effect of bullishness, generally speaking, because it kind of means there's less stock in the market. So of course there's less, therefore availability, less supply. Demand might increase just because of that self-fulfilling prophecy. So you end up getting a price up. I don't look at it too much as when do the buybacks start, stop, or anything like that. Instead, what I do is I just say, well, that could be an extra little key on top of our over existing price action. What are your thoughts on buybacks, Ty?
Yeah, I agree. And I think that you don't want to be too fixated on the dates because it's really the market's well and truly in tune to what's actually happening well before the event actually happens. So a lot of the time it's actually factored in well before the buyback actually happens. If you're waiting for the date, the market's probably more than likely factored it in well and truly prior to it. So I think it's just knowing and adding it to your arsenal. I think knowing that a little bit like, when it's very similar, Tom, to when a stock's paying a dividend. It's paying a good dividend. You have to factor in that the stock is going to drop that dividend more than likely. So it's just you're not going to short it just because of the dividend, but you have to be aware that it's probably going to help it. So I look at it a bit like that, where you're really just factoring it in as part of your analysis, but you're not making a decision based just on that.
Yes. So the next thing here just mentioned from Braden is how you prop up your company with the 110 billion buyback. Well, look, it's my thought process, Ty, that part of the reason they did this massive buyback is because, of course, Warren Buffett also sold some of his Apple position. He went negative 13% on his allocation. So that's never good to have in the tabloids. Can you counteract that with a big buyback? Possibly. So that's part of it. Yeah, for sure. All right. There's another question coming in here. Oh, yep. You want to say something?
It was a reasonable chance. Yeah.
Next question is margin requirements for Bitcoin are quite high, so it doesn't really make it tradable. It depends, I guess, on your account size. The thing with margin is obviously it's a great tool, but also there is a reason sometimes with very volatile pairs, you're not going to get like a 500 to 1 or 100 to 1 or anything like that on it. There's also Ethereum as well. So Ethereum would have, overall, because it's kind of like the silver to gold. I treat Bitcoin like gold and Ethereum like silver. That will have larger amounts of, volatility for the same kind of size. So I guess it's all perspective, but really, I don't think it's necessarily about margin pie and investing and trading. What it is instead is you have to say, okay, well, if I'm risking $50, how much am I going to make from this trade? Am I going to make a 2 to 1? So therefore make $100. If I'm doing that, really, it doesn't really matter how much margin I have. I'm risking $50 to make $100 as long as I'm just sticking within my ratios. So margin just allows you to have less money in your overall account, but really you should be practicing your risk management. And that's how you get your replicable steps. So look more to your ratios, like your win ratios, to just, using margin and saying, okay, I'm YOLOing this position. I'm doing this. You don't want to be doing that. So you want ratios ideally. And that's the first step to really, I think, becoming more successful in your trading and investing journey is to understand that it's about it's a race, sure, but it's not like slow and steady often wins the race. It's not, you don't want to be that rabbit or hare that goes, a million miles an hour, because you end up making it the wrong way. And it's my experience after talking to many traders throughout the years, the people that have made it the wrong way, Ty, often give it up. And I don't
Yeah,
want to see people do that. So,
no.
yeah. How does natural gas look to you as a swing trade if it breaks upwards, and is it a good trade? So yeah, natural gas comes up to us a lot. I'm really always surprised this one is so popular, Ty. I call it the widowmaker. So this is a very dangerous trade. Excuse me, from the role perspective. Um, so I've been discussing this 1622 for a long time. You have to get natural gas right. You generally want to be in and out of it relatively quickly, because if you hold it for too long, there are costs. So I would suggest that you contact your Pepperstone representative and just make sure you're aware of what the natural gas costs could be if you had to hold it for a long time, or if you were planning on doing that. Because, Ty, this is a little bit different to a standard CFD, isn't it?
Yeah, it is, no, most definitely. And it's similar to silver in the lot sizes. You got to be careful when you're trading silver as well. Just
True.
as a side note, you got to be very, very careful on the lot sizes, because you might get a very, very nasty surprise, Tom. So yeah, it is. You've got to be really, really aware of how long you're going to hold it and the costs involved in it, because sometimes
Yeah.
it's actually not worth it. You've got to be switched on. It's not probably one for beginners.
Yeah, no, I don't think it is. So a lot of beginners do get into it, but they don't know what they're doing, and I found that a lot of the time. Just a word of warning. Anyway, I liked the last week of close. This was incredibly good to me. We had a lot of rejection weeks. Then we ended up seeing a big closure out. That to me led into thinking that natural gas, which had already found, in my opinion, a very strong base, was probably on the move. And so far this week, it has been. I've spoken about this a few times, but if you actually look on the history, there's a very huge support level. So, yeah, I can see why it's rallying. It may have a little bit more in it. It's possible that this actually goes all the way to around $2.40. Would be kind of like where I could see it going technically. But natural gas loves doing this, guys. So you've got to just be careful. It can go up, down, and all around. I think risk management would be the biggest key on this one. Braden says here, people are addicted to the big percentage moves. That's true. They are. You always find that people will always go and move into the pair that trades the most. So a classic of that would be SMCI or NVIDIA earlier this year. Everyone went wild. And generally, I find the best trades and the best repetition often is what, in things that most people aren't looking at. Like, I would say that we were very early on gold discussion. You can go back and have a look at our gold discussion this year, which has been very heavily bullish because of the price action. The price action has shown us that. Another one has been HSI, which has often been one of our favorite one of our favorite picks of the week type. It's the Chinese market. And I mean, if you were listening to the media, you'd be terrified of this one because there was nothing but negativity coming out about it. But at the same time, the price action was making a series of higher highs and higher lows throughout the recent times. And as it turned out, I later found out that there was a huge amount of shorts here that recently in the last 2 weeks got squeezed out. So, and they're still getting squeezed out. So yeah, it just shows you that the price action is the key. So that's a good one there. What are your thoughts on nickel versus the US dollar? So I think nickel, copper, any of these, to me, when you've got inflation kind of sticking around, when you've got government expenditure still, really ruling around in the world, I would say that they're all looking more bullish. So you can see here that the copper's probably at a bit of a resistance for the time being, having a bit of a rest. But in general, copper is looking quite strong. And if you look at nickel, which I don't trade nickel generally. Again, it's another one that you'd want to check out your lot sizing and stuff on. But if you bring up nickel on a chart, it has started to make some turnarounds. So I think, Ty, you would see something straight away here that you like. Do you want to walk people through what you're starting? Well, you probably already like about this trade.
Most definitely. It's obviously got the lightning bolt. It's come off a base. Lightning bolt is already there. It's trading above the 20 moving average, as we can see. The only thing that I would say about it is, though, it's right at a point of resistance right now. But if it breaks through that, I think it really opens itself up to a reasonable move up. Like, it's probably got a little bit of legs in it. but it's right at the level now where it's go time. It's done all the right things off its little mini base, most definitely, but it needs to it needs to sustain it now. I think that we need to get past this level because there is resistance there, no question about that. We get past that, and I think it's happy days. There's a decent move there.
Yeah, I agree. I agree. It's pretty good. Braden says here, I remember you being bullish on gold in October of 2022. That is correct. But you can see, look, it's you know, it's not that it's rocket science. It's just that you're looking at a change in the dynamic. So back here, what I realized was central banks were starting to buy gold in a pretty big way. And when central banks start doing something, they tend to keep doing it. So that was part of it, but also the price action here dictated that we were breaking on the upside. So I just thought it was a good comment because yes, we've been bullish on gold several times over the last couple of years, but as a trader and investor, the key is to understand when it's time to be good and bullish on gold and silver and when it's not. Because let's just say this: if you go out and you really zoom out on gold, if you're inherently bullish on it all the time, it hasn't been very good, has it, Ty? For most of our trading career, if you load up GC, so we'll just look at gold futures flat here. It had a lost decade, like literally since 2011. This thing just basically lost. And what I mean by that is you would not want to be in. So whatever reason, I've got to cut off here. But anyway, if you go back through, you'll see that gold is very, very poor on the last 10 years, and that's because of all sorts of powerful factors. But when it goes, it tends to have those kind of large runs on it, and then it becomes a horrible, horrible, horrible thing for another 10 years. At least how I say it anyway.
Absolutely. All right, everybody. Look, thank you so much for joining us tonight. It's been a really good session. I think now we're going to start seeing some trends in the markets. Now that the earnings are out of the way, we're going to get a direction one way or the other. So looking forward to seeing what the market gives us for the rest of the week and into next week. Please join us again next week at the same time, where we will look at the same technicals on a lot of the things we looked at tonight, and maybe a few different ones. We really look at what is actually moving at the time. So looking forward to bringing you these week in, week out. But thank you for giving us your time tonight. And we look forward to seeing you next Wednesday.
Absolutely, Ty. I'll just quickly answer Jordan's question before we finish up here. Hey, gentlemen, what's the best way to know when orders are waiting and whether they are long or short? So, of course, that's the million-dollar question for a lot of people, but you can start to gain evidence through a mixture of technical analysis and understanding where the orders are. Now, order analysis is its own thing. It can be a little bit of work to understand that. I do go through it in quite a lot of detail, and in fact, one of our courses, a day trading masterclass over on our website. But if you want to be interested in that type of structure, then you can find out. But it is about saying, okay, where are the positions now? What are they doing around this position area? And once you start to see what they're doing from a price action standpoint, you can then see that actually they're either bullish or bearish. And when you get that activation at a point where you already know they are, then you're starting to gain edge in the markets. And the best thing about this, I was talking with Ty about this the other day. From my perspective anyway, it doesn't matter whether AI exists in the business or anything like that, or robots, because they have for a long time. Really, when you want to grab positions in the market, you can't really hide them because it comes up as volume, Ty. And when you understand how to read volume, you have to have volume. You have to have a buyer and a seller, and a position must be built. So there'll be sneaky traps around that position. But ultimately, if you understand that that's where the position is being built, then I call it position-based trading. And I think it's probably the future of the next 10, 15 years. It already has been, but I think it's the very, very powerful method, frankly. All right. Thank you so much, everybody. You have a great week. Thank you. Come join us next Wednesday. Click the links in the description down below. Give it a thumbs up and give it a comment if you enjoyed today's video and session. And we'll leave you with a quick disclaimer. We'll see you next time. Bye-bye.
Thanks, everyone.